Hello Wolfpack, we're here on the 4-year cycle chart and we're trying to get an accurate demonstration of what the future could look like for Bitcoin and certainly the entire cryptocurrency market. I apologize for my face being a little bit overexposed here today. The lighting is a little bit mucked up, but I will sort that out in the future. So what could the future look like for crypto? Well, it's a very broad question and I'm not expecting to give you a perfect answer on it, but the way we can shape that future, the way we can understand that future is via the 4-year cycle. Before we even look into the extrapolation of data from the 4-year cycle theory, we need to get this on the table straight up. This is a very, very vague video in the sense that there's no way to accurately tell what future bull market prices will be, what future bear market prices will be. We do have rough indications from the 4-year cycle theory, and in fact, a lot of it will rest on where Bitcoin bottoms this year, and when Bitcoin bottoms, at which part of the year Bitcoin bottoms. Once we have that information, we can actually start to quite accurately assume when the tops and bottoms will be. But as of this point, we just need to explain what the 4-year cycle actually is. The 4-year cycle is based on the halving. As you guys would know, Bitcoin has a mining halving that happens every 4 years. It happened in 2012, 2016, 2020, and the next one will be happening in 2024. Now that halving, in effect, kicks off a cycle for Bitcoin, a cyclical process in which you have the halving, you then have 1 year of bull market, you have 1 year of bear market, and then you have 2 years of sharp accumulation, leaving you with a 4-year cycle that repeats upon the halving, right? So it's very cyclical, and people say sometimes, well, why does it happen? That's the reason. It's based on the halving. The halving is the driving factor of the 4-year cycle, and we do have evidence of the 4-year cycle being a thing. It's not just a theory, right? It's actually a full confirmed thing as per the halving and also via date range trends. Now, again, lots of people would debate the accuracy of the date range trends, but that's fine. You can debate the accuracy of them as so long as you admit they exist. It doesn't matter what the accuracy is, right? And that's what we're admitting here on the channel. You guys would know I'm a big believer in the 4-year cycle theory, and I think that it is very much a date range trend that we can be using for predictions actively. However, it doesn't necessarily mean we need to be using for precise predictions. I mean, I've literally said in the 4-year cycle theory here, as per the 4-year cycle date range trend, I think the bottom in this cycle, the bottom in this bear market, this current bear market we're in right now, will be in Q4, right? Q4 is a 3-month period of time. That's not an accurate prediction, right? That's not a precise prediction. Point is, it's a vague prediction, and that's what the 4-year cycle allows us to do. But the benefits of the 4-year cycle is that the longer it goes on, the more data points we have, the more precise we can be with the predictions. And so ideally, we'll get to a point in about a decade where we can be very precise with predictions and even nail it down to a week or 2-week periods, right? That's the ideal scenario. And obviously, just speaking about this a little bit more, expanding on this, people think about Bitcoin and they want it to enter this massive super cycle bull market. And it's like, well, we don't actually want that to happen. What we want is for Bitcoin to keep following a very structured trend that is extremely predictable. Because if we have predictability, we have maximized potential for profits and minimized potential for losses. If we're in a random super cycle that just kind of goes wherever it wants, like the stock, not necessarily the stock market, but like say a particular stock, that's not what we want, because then we lose that predictability and then we're basing everything purely off short-term TA, which is not a very accurate way to live your life, really. I mean, unless you're an experienced trader, but the vast majority of people are not experienced traders, and so we need this predictability. And even for an experienced trader, like myself, who trades as a career, even for an experienced trader, having that predictability lays out a safe, steady, stable backdrop of the trading you're going to be taking place within the financial market. And it's going to make you much more profitable. It's going to make it much less stressful, right? So this 4-year cycle, by definition, is a cycle driven by the halving. 1 year of bull market, 1 year of bear market, 2 years of accumulation. It's extremely beneficial for traders and investors alike because it tells them where the market's going on a vague macro scale. And at this point, we have no evidence to believe it's going anywhere, right? We have all the evidence to believe that it is, a trend that will continue indefinitely, right? Obviously, until it doesn't, right? That's the whole thing with trends, right? They continue until they don't. But what the point is, we have no indication that it's going to slow down at this point. This is the 4-year cycle. The date range trend at this point has been extremely accurate. You can see that, color-coded here, I've got color-coded dot points and then color-coded date range measurements. You can look at those color-coded data and understand there is very strong trends. Namely 1,400 days between top to top in each cycle, 1,400 days between bottom to bottom in each cycle, 400 days roughly from top to bottom in each cycle, and 1,064 days from bottom to top in each cycle. That is the current trend on Bitcoin. That has remained true to this very point in time. And the November top was predicted perfectly from the 4-year cycle. And given that, we have to assume that the bottom, which will be in Q4, will be predicted perfectly by the 4-year cycle as well. Or vaguely, I should say, by the 4-year cycle as well. So that is the 4-year cycle trend. And so obviously, now we move on to the next question. It's like, well, if we have this data from the 4-year cycle, and if we have all of this date range trends pointing to certain points, surely we can extrapolate it and understand what's going to happen in the future. And that's what we're doing in this video, so buckle up here. So firstly, what we can do is we can expand the date ranges, right? Before we get into prices, we can expand the date ranges, right? So essentially, using this date range trend and assuming that the 4-year cycle remains true in this bear market, right? This is all extrapolation. It's all speculation. All should be taken with a grain of salt. But assuming everything remains true and the 4-year cycle remains valid, what we can go ahead and do is expand the date range and assume that, as per the 4-year cycle into the future, Bitcoin will top out in the next bull market in October in 2025, and Bitcoin will bottom out in the next bear market in October in 2026, right? The red line is the bull market top, the green line is the bear market bottom. That is what we can assume if the date range trend continues. Zooming out on the chart, that is what it would look like. It would look something like this, right? And then a bear market bottom. That's a very rough drawing, all right? But that's essentially what we're looking at there, right? Top in 2025 October, bottom in 2026 October, as per the 4-year cycle trend in date ranges. Now you'd ask, well, that's all well and good, and that's pretty simple. That doesn't really tell us too much about the price action, right? And that's right, it doesn't. So what we're going to go ahead and try to do is very roughly. Don't go and comment all this random stuff about, oh, it's too vague. This is meant to be vague. It's meant to give you an indication. Very roughly, based on what's happening right now, based on some mathematical analysis that I've done, where would the prices be for the next bull market top, and where would the prices be for the next bear market bottom? Now, in order to find out, and this is where we get into the mathematical analysis, and in order to do this video in a format that doesn't take an hour, I'm just going to read the data that I've discovered to you. I'm not going to go through the data with you because it would literally take an hour, right? It's taken me countless hours to kind of, bring this data up and get it all in order and all perfect. Okay, so I'm going to read it to you, but before you get into that, in order to find out what the next bull market top price and what the next bear market bottom price would be, we need to have an understanding of where this current bear market bottom would be for the extra data point. And that's why we can't be certain. We have speculation, right? Okay, so here's where we get into it, right? Assuming that the bottom in this bear market is either at 18K or 13K roughly, within those price regions. At 18K or 13K, we can assume two different top and bottom prices for the next bull and bear market. Now, the bear market bottom price might be at any different price, but these are just two example prices, and it's the mathematical analysis that matters, not the exact price point. It's giving us a rough indication. Now, I personally think that the bear market bottom in this cycle will be at 13K roughly, 11K to 13K. I'm looking at 11K to 14K, but just in case. So right now we've bottomed at right now we've got a potential bottom at 18K, right? That is the lowest point Bitcoin has reached in this bear market so far. And so assuming that is the bear market bottom, we're going to go ahead and extrapolate the data and try to predict the bull market top in the next cycle and the bear market bottom in the next cycle. But assuming we go lower to 13K, we'll do the same thing with that data and we'll see where we end up. Let's look into it. Okay, so let me get the pen up so I can show you what I'm looking at. Looking at this one now. Okay, so from the bottom to the halving in 2016, we saw a gain of 290% roughly on Bitcoin. From the bottom to the halving in 2020, we saw a gain of 210% roughly on Bitcoin. Speculating what the price points will be or what the percentage gain from the bottom to halving in 2024 will be based on these two data points, again, it's preliminary data, would be 155%. If we're taking the percentage decrease from 290% to 210% and applying that to the next one, we would see from bottom to halving 155% gain. Therefore, in a supposed or in a suggested 18K bottom, we would see a 150% gain and then 46K at the halving, right? So in a 13K bottom, we would see 32K at the halving using the same data. Okay, so again, let me just go over this one more time. If we saw this bear market bottom out at 18K, we would be at 46K at the halving, which would be in 2024. And if we see this bear market bottom out 13K, we would be at 32K at the halving in 2024. Now, moving forward with that, we can use the halving data to predict the top, right? So in 2012 to 2013, we saw a 9,400% increase from Bitcoin from the halving to the top, the bull market top. in 2016 to 2017, we saw a 3,000% increase, and that's a 68% decrease from the previous cycle. And then in this bull market we just saw, 2020 to 2021, we saw a 1,200% increase from the halving to the top, which is a 60% decrease from the previous cycle. Therefore, the speculated halving to top data for 2024 and 2025 would be a 432% gain from the halving to the top. So using that data, we already know where we'd be roughly at the halving. If we bottomed at 18k, we'd be at 46k at the halving in 2024. Adding 432% to that, we can see that, therefore, if we bottom in this bear market at 18k, we would see roughly a 244k top in October 2025. And if we bottom in this current bear market at 13k, we would see roughly a 170k top in 2025. So you can see that based on how low we go in this bear market, the next bull market's projections are much lower. I think these are very realistic price targets. You think about that. 170k. So say we bottom here in the bear market in Q4 at 13k, we would be expected to have a 170k top in 2025. That seems extremely realistic, right? It doesn't seem overly optimistic. It doesn't seem overly pessimistic. I would actually back that. And the same thing with 18k, right? So now we can measure. So if we know where that's going to be, that's that yellow box that I've drawn in there. That's where we will be. So depending on where we bottom in this bull cycle, in this bear market right now, it would affect the next top. But we're looking at a 170k top to 244k top, right? Prior to the bull market, so now we're looking at this next kind of dot, box over here, and we're trying to predict the bear market price. So now that we know that if we bottom at 18k in this bear market, we're going to be topping at 244k, and if we bottom at 13k, we're going to be topping at 170k. We can bring that data to light and we can extrapolate it. I'm not going to go through it because it's going to take too long, but essentially going through all of that data and applying the rough estimates of top to bottom data and percentage decrease from that period of time, plus for date ranges, we can see that, okay, so this is where it gets confusing. We can see that if Bitcoin bottoms in this bear market at 13k, this current bear market, we would top in the next bull market at 170k, and we would bottom in the next bear market at 34k. If Bitcoin bottoms at 18k in 2022 bear market, the current bear market, we would top in the next bull market at 244k, and we would bottom in the next bear market at 87k. That's a mouthful, and it's a lot of data to go over. But if you pause the video and you look at the data I'm actually showing you right now, you can see using that mathematical kind of, I guess you could call them formulas that I'm using. Yes, it's very rough. Yes, it's extremely rough and it's extremely vague. And it's by no means an accurate demonstration of where Bitcoin will go in price ranges, for example. But it is a very good guideline. And so at this point, what we can start to do, since we're at 18k already on Bitcoin, we can say that the highest Bitcoin will go in the next cycle, given the current price action, is 244k. So any prediction you see over 300k, 500k, a million for the next cycle, you can kind of list that as over-optimistic and not really based off the mathematical data. The mathematical data is suggesting a 244k Bitcoin top maximum in the next cycle. And if we go to 13k on Bitcoin, this bear market, we're looking at 170k. So I hope you guys understood that. I kind of just, shoved a bunch of data down your throat. But I suppose, I've summarized it a few times here, and I think it's pretty understandable at this point. So one more summary. I'll just give you one more summary just in case you didn't quite get it. So based on where Bitcoin bottoms in this bear market, it affects when Bitcoin tops and bottoms in the next bull market and bear market. We're looking at 244k to 170k, and for the next bear market, we're looking at 34k to 87k, again, depending on where Bitcoin bottoms in this bear market. So when we see a confirmed bottom on Bitcoin, wherever that may be, and whenever that may be, we will have very, very accurate data to be applying to this extrapolation mathematical trend, and then we can start to accurately predict where those prices will be. So I'm excited to see where the bear market bottom is. Regardless of where it is, it's going to give us a really good indication of where the top and bottom is for the next cycles. So without further ado, let's get into some of my personal endeavors here. We've got Wolves Crypto V.I.P, we've got BitGet, and we've got the Crypto Academy. So let's get into that. So for those of you who don't know, I have a VIP group of some sort run through YouTube, in which I post altcoin trading signals and various other things. You can click the join button and check out all of the details associated with that for the cheap price of $28 USD a month. And then also we use BitGet on that Wolves Crypto VIP. So the VIP members use BitGet, and my general audience uses BitGet as well, because I personally think BitGet is one of the best exchanges you're going to find, right? Binance I use for spot, and then for BitGet we use futures. Half the fees are Binance, which is commonly referred to as the most cheap exchange in the world, or cheapest exchange in the world. So, you know, BitGet definitely takes that throne, and not many people know about it, which is interesting. Also non-KYC, which is great for people, you know, for tax reasons, and also in general in avoiding regulation. In Australia, we've got restrictions on futures trading, and so BitGet allows us to actually trade futures in Australia, which is great to see. They've also got a great reward center in which you can earn rewards for completing simple tasks. Sign up to BitGet using my referral link in the description below. And then we've also got the Crypto Academy. So become a trader, 10-unit course, teaching you everything you need to know about TA from step 1 to step 1,000,000. Basically, literally everything you need to know, right? We've got the whole unit topics worksheet here, or not worksheet, but list here. You can check all those details out on the website, which will be in the pinned comment below. And then also chuck us an email here at Crypto Academy Courses if you have any questions. We can help you out there. So thanks for watching. Hope you enjoyed the video, and I'll catch you in the next one. Thanks.